Welcome viewers. We will continue today the topic absorption of company. This is part second. Earlier we have studied part 1 wherein we have seen the basic theory regarding the absorption of company. It was covering the process of absorption of company, then the methods of calculation of purchase consideration, the occurrence of goodwill or capital reserve, and the other things related to absorption of company. Today, in the second part, we are studying accounting entries in the books of vendor company, which is alternatively called as the transfer company. You can see there the vendor company. I have done oblique transfer company over there. The meaning of both the concept is same. The company which is selling its business. Now, let us move ahead. Just for recap purpose, you can go through this slide. These are 5 to 6 steps under which the process of absorption takes place. Existing company purchase the business of another existing company to reduce the competition or with the other motives, say for example the large scale economies or other. Then the company which is selling business, its corporate life comes to an end, that is vendor company is wound up. Then the assets of the vendor company are being taken by the purchasing company, or we can call it as the transferee company. Along with the assets, the liabilities are also taken by the purchasing company at the agreed values, the values decided by both the companies altogether. Then on the basis of asset minus liabilities or the lump sum method or the payment method, the purchase consideration is decided. The purchase consideration is nothing but the price paid by the purchasing company to the vendor company. Already we have seen this, the process of calculation of purchase consideration in the last lecture. Then this purchase consideration is paid by purchasing company to the shareholders of the vendor company or the other creditors of the vendor company, which covers the combination of shares, debentures and cash, or either any one of them. Sometimes the combination of shares along with debentures and the cash is paid by the purchasing company to the shareholders of the vendor company and the other creditors of the vendor company. Now exactly we will see the accounting entries in the books of vendor company which is selling its business, how its business is closed down, how the assets are eliminated from the balance sheet, then how we eliminate the liabilities from the balance sheet, unless and until, as per the Company Act, we all know that when the balance sheet comes down to zero value, when there is not a single rupee asset liability is there, then the corporate life of the company after applying to the ROC comes to an end. When there is a balance of rupee 1, maybe even maybe a 1 rupee, the asset or liability, the company's existence is there. It doesn't wound up. Now exactly for that purpose we have to see how the company is closed down. The closing entries are necessary to be passed in the books of vendor company. See, these are the accounts involved. Already we have also studied these accounts which are involved in the case of absorption of company. Accounts which are drawn in the books of vendor company. These are the 4 main accounts, and as per the requirement other accounts are also opened there. The realization account is the first one account, then purchasing company account. In the books of vendor company, the vendor company maintains the account for this purchasing company. Along with that, the bank account is also maintained, cash or bank account is maintained over there. Then the shareholders account is maintained over there. Finally, all the adjustment, or we can say that the process of absorption comes to an end in the accounts of shareholders account. When the shareholders account is closed, then the absorption process gets completed. Now let us start the accounting entries, an important part of the absorption of company. Accounting entries in the books of transfer company or vendor company. You can see there, first entry is there for transferring asset to realization account. Means in every absorption of company case, the assets of vendor company are being transferred in the realization account. A temporary account is open in the books of vendor company called as realization account. So what is the transfer entry? Friends, Mind it. Don't by heart the entries. Try to understand the entries by logic, so that these entries will remain in your mind forever. Whenever there is a discussion, whenever there is a debate on the absorption of company with regard to the accounting entries, you will be there first to talk on that. So, what is the first entry for transferring the asset to realization account? As you can see on the slide, I have shown there, the realization account is debited and sundry asset account is credited. This is very simple. Why the sundry asset account is credited? As in the books of vendor company, the asset lies on the balance sheet on the asset side, and asset side shows the debit balance. When we want to remove these assets from the asset side, we have to credit these assets. Unless and until we are crediting, the asset will not be removed from the balance sheet. So in this entry, what they have done, assets are shown in the balance of vendor company showing debit balance, that are cancelled, that are transferred to the relation account is debited and asset account is credited. Similarly, the transfer of liabilities, the assets and liabilities are transferred, we have already seen at the aggregate values between the both the companies, that purchasing company as well as the vendor company. Now, how the liabilities are transferred? What is the entry for that? Liability account is debited, realization account is credited. Of course, in the books of vendor company, liabilities in balance sheet, they are showing the credit balance. And if I want to cancel those liabilities, friends, what I have to do? Very simple. I have to debit those liabilities. Then from the balance sheet of vendor companies, those liabilities will be removed. So in this entry, what they have done, the liabilities account is debited and the realization account is credited. Realization account holds the liability, that's why the account is credited, and in case of assets are transferred to realization account, that's why the realization account is debited. Now the third entry, in every case of absorption of company or in every transaction, what we have to do, friends? We have to pass this purchase consideration due entry. This is called as, or we can say that, purchase consideration receivable, right? Now when